In this video, we will talk about Hyliion, what happened, where things stand now, and whether you should buy the stock. Before today's video begins, if you like my content, please like, comment, and subscribe. Hyliion is an American EV truck startup founded by Thomas Healy. The company went public after a reverse merge with a special acquisition company, commonly called a SPAC. When we look at the price action, we see that its price fell from a peak of $58 to the current level of $16, which is almost back to the June 2020 level before the surge. For a few weeks now, it managed to remain at the same price level which it managed to hold because the vast majority of negative sentiment and short sellers have either left the stock or have been priced in. On the other hand, it also shows that the stock is currently lacking some steam to go higher. Now, there are two reasons why this is the case. First of all, there are not a lot of announcements at the moment. Its ERX was announced for mid-2021, and its hybrid system has been made public for many years. The initial boost and interest when the company went public is now gone. What I mean by this is that there is no longer a long line of people waiting to buy the shares because they've been hyped up, which is necessary for any company stock price to surge in a short period of time. The second reason is because Hyliion is affected by its own fundamentals and the recent developments coming from the market. There were rumors that Hyliion hybrid systems were saving less fuel than what it claimed, and that there was a possibility for SEC investigation about the claims of charging stations that it owns. I believe that those claims do not hold a lot of weight. On one hand, the reviews that I managed to gather regarding Hyliion hybrid systems do mention that they feel the load lighter when the hybrid system is on. Regarding the SEC investigation, I did not see any follow-up to those articles. Despite the fact that those accusations do not carry a lot of weight, they were enough to put some cold water on the momentum at the time, which accelerated the sell-off of the stock in fall 2020, resulting from the collapse that we saw from its peak to a bottom of $16. The other aspect is the news coming from other competitors of Hyliion. I believe that the scandals of fraudulent reporting which have hit Nikola Motors by fall of 2020, which caused its chairman to resign, its stock price to plunder, and its commercial partners to gradually leave the project, have also affected the EV sector as a whole. It had investors wonder how much due diligence was actually done in startups companies like Nikola, but also indirectly like Hyliion, even by the important and experienced partners such as General Motors and Porsche when they decide to partner with those startups. Yes, Nikola had a founder who was quite obnoxious in hiding Nikola's own shortcomings and attacking its competitors. But if you really think about it, this is only the personal side. The stakeholders surrounding those startups were pretty much clueless of what was actually going on within the companies until the news were leaked to some investigative websites such as Hindenburg Research. Does this mean that there is a structural problem with information completeness and reliabilities within those companies, those that have gone public in a red-hot sector via SPAC, because it has less reporting requirement and more flexibility than a traditional IPO? At least that is a question that needs to be answered at some point. Of course, Hyliion is not Nikola, but who can guarantee that Hyliion is really immune to the same lack of transparency investors suffer from the whole Nikola debacle? Normally, the answer that is typically given is that those accusations need to be backed up by proof. Except the market is not necessarily like the court of the law. Sometimes the existence of doubt is enough to melt down the share price. Another factor from the sector is the increasing competition. Hyliion is not the only company in the long-haul truck manufacturing sector. Investors have caught up to the fact that there are many manufacturers that are proposing similar or identical products, among which are some heavyweight players such as Tesla, BYD, and Cummins. From those aspects mentioned above, we understand now why Hyliion shares have been able to hold the ground around $16, but at the same time unable to move beyond that point. The downward pressure has become more present as time goes on, and the stock requires some new and major catalysts to go higher. In my first video covering Hyliion, I mentioned how I really like the hybrid system because it allows businesses to convert their existing fleet to hybrid vehicles, which can yield immediate fuel savings. I also assumed that this can bring a constant cash flow to Hyliion, allowing the company to achieve its goals faster. My conclusion now is that the hybrid system did not generate the revenue expected, and that it will not be able to attract more investors to buy the shares, because the market believes that the future is for fully zero-emission vehicles, and that the truck companies do not want to buy the hybrid systems because they are not convinced that it can work. The current situation is that the future of Hyliion mostly depends on the development and manufacturing of ERX, Hyliion's own fully electric truck. The company claims that a vehicle should be ready by mid-2021, which is 4 to 5 months from now. In my opinion, the deadline may be too optimistic, and a delay of an additional 2 to 3 months should be expected. After all, we are still in the midst of a pandemic, and operations are relatively slow in the current context. If they announce a delay, it may cause the share price to go lower, which would be a good opportunity to buy more shares. When we look at the options market, the current contract holders are a lot more equally divided between calls and put options, with a slight majority for the calls options. The key strike prices are between $15 and $18. This means that the market considers that the current level is unsustainable, that it will eventually go much lower or rebound from there. Of course, the fact that the calls are slightly more in demand than put shows that the consensus still believes that the shares will go higher, but the slight margin will impact how the trade should be structured. The catalysts we should pay attention to are the upcoming quarter filings and any announcement regarding the progress of ERX. The stock price is expected to react significantly to anything regarding their new truck. My recommendation is to buy the stock, because I believe that the main catalysts in the upcoming 2 to 3 months will push the stock price higher. I think that the ERX will be produced and delivered before the end of 2021, which will bring Hyliion on a whole new level. Because the current price is relatively low, I would suggest to buy 75% of the allocation at the current level and 25% later in case the price falls lower. My price target is $25 within the next 2 months and $40 by mid-2021. Since the options show that Hyliion has a fairly high probability to go lower as well, I would suggest the maximum allocation to be capped at 1% of your portfolio. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.